of Canada holds interest rate. What the heck? Why? Stay tuned to find out. Good day, Toronto. Welcome to another Tuesday React video of what the heck did Bank of Canada just do last week on Wednesday? Oh my goodness. Look, before I even tell you and give you my reaction, I wasn't surprised that they were going to hold. Actually, I was actually having a lot of bets with a lot of my friends that they were actually going to hold and not do anything, and I was up $500. But the purpose of why I'm saying this is not because I want to be right, but I actually want to be wrong because I think it's the right thing to do. But I knew from looking at all the data and all the trends that I just couldn't see them actually do it. And then on top of that, the US Feds also didn't raise rate. And wow, I was a lot of people really not impressed. So, despite this sounding really bad, it sounds like my prediction of maybe 2 to 3 interest rate hikes this year for the Bank of Canada is probably going to be true. I'm now 99% sure there is going to be one in March, like I said earlier in December. And the whole reason on why I think this is, it's just too early for the central bankers to increase interest rate. They're going to have the cover up of Omicron of why they actually can't increase interest, because even though they want to, they can't, because there's just too much debt in the system. I'm pretty sure when we have 2 to 3 interest rate hikes, despite everyone thinking that interest rate is only related to real estate prices, it's related to a lot of things as well. And if you were following any of the other news out there, just the talk of dropping interest rates, the few days before, we saw the stock market tank, really bad. So just imagine what 2 interest rate hikes or even 3 interest rate hikes will do. It's not the right thing, but it's just the thing that I think is going to happen, right? So it's just absolutely crazy. So let me give you my kind of breakdown on how all this happens on the real estate side. Right, so let's get to the first headline. Like I was saying earlier before I did this, Bank of Canada holds the rate, and now they're signaling it's going to hike. I already said the first one's going to come in March, guaranteed. The Feds are going to increase it. Now everyone's talking about how it's going to 50 basis points increase. Look, everyone can have their prediction. I'm still of 25 basis points and no more than 2 to 3 hikes this year. So you can see I highlight a couple here saying that they're using Omicron as a wild card on why they can't increase it. And my thinking is just this. They're going to keep finding a reason to not increase interest rates. That's what it's going to boil down to, right? So all this talk about how, they're very, very much going to increase interest rates in the coming months in March is more just them talking about increasing interest rate because they're not increasing interest rates yet. So they have to talk about it to basically spook people out from, spending too much cash and curbing the inflation. But between now and say March 2nd, is there a reason why they could not increase interest rate? Absolutely, right? I'm not going to list all the reasons why. I don't want to jinx it because I don't want another variant, but it could just be a lot of other reasons. And I was talking about this before where what if they start eventually looping in climate change to all of this too, right? Because they talked about how, Bank of Canada now has to deal with climate change. So while I do believe interest rates are going to go up, I just am constantly in a state where I believe that they have to keep it low, and they're going to find every reason possible to keep it low. It's just now with they not increasing in January, they're going to have to increase in March. And if they really don't, oh boy, it's going to be a gong show. So now in regards to real estate, everybody thought that the Bank of Canada was going to increase the interest rate, and they were kind of holding still. And all of a sudden, whoosh, it didn't, and now everyone's rushing into market. But let me tell you something. Even though if interest rates actually increase, there's a very counterintuitive thing that happens in your everyday person, because you have to keep in mind, everyone who's actually buying a property right now, they generally have a letter from their bank with an interest rate of a pre-approval all locked in for 30 to 90 days. So if the interest rate, let's just say, for example, in this make up world, increase tomorrow by 100 basis points, a whole percentage, people can still take their little piece of paper on pre-approvals and go and buy a property and lock in the rate. And this is actually what's counterintuitive. Because they're holding that rate and they want to keep it, they're actually they force themselves to buy something within that period before it expires. So actually, when the interest rate go up, it crams everybody into the market even more, which actually drives prices up some more, right? So counterintuitive, but that's actually what happened. So we'll see in March. But from now until March, yeah, the real estate market's going to go buck wild. Yeah, called it. It's just very unfortunate. I'm pretty sure we saw 5 to 10%, depending on the area, of increase just from turning over to January. I would not be surprised if I see another 5 to 8% before the next interest rate hike. And keep in mind, while I talk about interest rate, it's actually not that important to the price of real estate. You have to remember, everybody buys real estate, they buy a monthly payment, they don't buy the actual price of it. That's why all these prices keep going up. But ultimately what happens is if you're buying a $2 million home or like a $1.5 million home, 0.5% increase in your mortgage is not going to make or break you. If you're right at the brink, you probably shouldn't be buying anyways, and you're just putting yourself at risk, especially if you're under 20% down, right? But if you're buying and you all this talk about 7 interest rate hikes, yeah, that could scare you, but that's if we get to 7. But I don't think we're getting there, right? Like for me to see prices actually slow down, right? Like slow down, we would have to see, I would say, variable rates of what it was back before the pandemic of 3%. Because you have to remember now, like if you go get a B lender rate right now, it's like 3.2. That's what a rate was before the pandemic. So for us to see a slowdown in demand, I think we have to get there. So we have to see 7 rate hikes to get to that point, and we're at 0 right now. They still have 7 to go. So that's why the next 2-3 interest rate hikes that are coming, I wouldn't worry too much. It's going to come, but it's not going to affect the market too much. But if you are worried about the whole fixed and variable, check this video up here. Now, I'm going to scroll back down here. You can see right here that they're talking about how they plan to increase interest rates later in the half the year. Again, this is just more talks of them saying it, and now they're expecting inflation to fall back to 3%, like I was telling you earlier, and then they could increase the interest rate back to the targets by 2024. I think that's a good plan, but between now and then, what's going to happen to real estate prices? I think they're going to go up, and that's exactly why. So they're just trying to talk the market down. So that I don't want to harp too much about this interest rate stuff. Like you can see, I'm like personally actually very flustered about it. Like I really wanted to see interest rate hike because everyone thinks that realtors have it good right now because prices are high. Like in reality, like yeah, they're fine because the commissions are higher per transaction, right? But when you have frenzy like this, kind of like 2017, it's harder to actually do transactions. So yeah, it's not as great because when you're buying, you're constantly losing out. And when you're listing, even though people think it's easier to sell, it is easier than buying right now for sure, but it's a lot easier. So the commission rates gets a lot more market competitive. Let's put it that way, right? So it just becomes more difficult to actually have a good business in a market like this. So I actually want interest rate personally for my own reason. All right, now let's do the next article. We got Bank of Canada's Governor Tiff Macklin would like you to know he doesn't like inflation. Thanks. I don't think anyone likes inflation right now, just because the cost of living is going up. And I don't know if this is kind of like a puff piece for him to kind of like hedge the fact that he stood pat on the interest rate and just say, hey, look, I don't like inflation. I'm going to increase it at some point. But look, they're saying that, he's not going to regret it. And it's kind of like speaking out of both mouths, right? Like, I think he has a really tough job, and I don't think he's that, dumb. I actually think he's very smart, and he knows he can't increase it too much because he is thinking that having a slow inflation and slowly have things inflated is actually the lesser of the evils than having something completely blow up. So you don't want to be known as a guy who has a recession or the economy blow up because you increase the interest rate too much. So that's kind of what I think, but he just needs to talk it out so that it sounds like he's anti-inflation, and he's eventually increased rate. But I think this is just kind of a puff piece. But I just find it really funny that they had to kind of write this in the Globe and Mail and address it, right? So here he has a quote says, "We're faced with the biggest and sharpest recession we have ever seen in our lifetime, and we took extraordinary actions, and they have worked. I completely agree, but you took way too much action, and you've overstimulated the market." And they got a fancy chart here showing that this is their target inflation of 2%. We clearly overshot it over here, and they think that it's going to come back down, right? Like I was saying earlier in this video, inflation's going to come back down as a rate of change. But when we ultimately are in an economy where the cost of borrowing money, like mortgages at super cheap, is lower than inflation, asset prices are going to go up. That's just my theory, and I've been pushing that for the last 6 months, and that's where I stand, and I think that's going to happen. So until we, again, see 3% variable mortgage rate, I think prices are going to keep going up, right? And now they say down here that, rates are going to go up. You can bet on that. I bet on that too, 100%. I said 2 to 3. It's just they're not going to go up substantially enough to make a difference specifically to the real estate market, right? I'm not going to talk about the other markets. That's not my lane, but in real estate, you need a lot more interest rate hikes to make a difference. If this is the type of real estate content you enjoy, make sure you smash that like button and subscribe to the Prime PropTO channel, because every week we make awesome content and reaction videos like this so that you can have transparent and honest feedback of real estate news that actually is fed to you from a professional. And we do this because I want to give you my honest and transparent reactions and thought process of what's happening in the market right now, so that you can arm yourself of what the heck is going on when you're about to make your real estate move. And we hope that when you are going to make your move, you can be like, oh, Zhen, he knows what he's talking about. And you can book a call to strategize your future using the link on the bottom of the screen, and it's www.chatwithzen.com. We got another popular one here. Families are roadkill on the way for investor profits in the housing market, and this needs to be fixed. I 100% agree with this. And this comes always back to me talking about there's nowhere else to put your money, and everyone's storing into real estate market. When we're on the list side, I would say half is end users and half are investors right now. And for me, I find that even when I'm coaching my investor clients, the numbers have to work. Otherwise, you're just speculating. And I know there are a lot of speculators out there, and I've never been the speculative type. Whenever prices go up, $400,000 or $500,000 in a few months, and people use the capital gains exemption and say they lived in their home and they sell it, right, which is equivalent to making a ton of money on income, why bother working, right? Because that was the headlines being fed to you. That is actually froth, way too much. You need to kill the demand. It's not on the supply side at this point, and we saw this in 2017. That's why I was saying earlier in this year, we're going to see an investor down payment clamp down, guaranteed. It's coming. It's just how much, I don't know. But they are correct in the fact that when you have so much people driving into real estate market because there's nowhere else to put your money, it forces a lot more people to compete for the same property because no one wants to sell either, right? So then you get to the point where investors, for me, when I coach them, they have a bottom line number, and we won't go past that, which is fine. But then I find the end users who just need to get a home, they need the space, and they're like FOMO, fear of missing out. Forget it. Here's my my number, take it or leave it. And then they blow everyone out of the water, and then that sets the comp, and the next guy wants that and plus more, because if there's 20 offers, 19 of them lost out, that's another 19 on the next one. You see, it's a very perpetual thing. And while I do believe it's a combination of no supply and no demand, we still have to increase the supply, which is going to take time, but we really need to clamp down the demand right now, because everybody thinks that they could just, flip real estate and not make a job, not work a job right now and just make money. And that's why there's so many people jumping in. And trust me, some people, whenever these things change, are going to lose their shirts. But if you're an investor and you are following fundamentals, your numbers work, you're fine. You just got to move fast. That's all. So I highlight a couple things down here, right? You're saying that there's also a lot of institutional investors that are coming into the real estate market. I think last year they talked about core development buying up a lot of greater horseshoe kind of properties, 5,000 of them. That was their target. And this is what I was saying, right? You have to understand, the pension funds have a mandate to get 8% yield. And if their bond market, and I'm not going to get too complicated in this, but if another part of their portfolio is not doing poorly, the other part that is doing well has to take on more risk. And they're moving more and more to the real estate side. So that's why there's been so many purpose-built apartments that have been built in the last little bit. And we're going to see a whole bunch of them come online this year and next year. And we'll see how the market absorbs all of it, because they are going to hold on to those buildings. They're not condos, they're not to sell. And they're going to rent it out to get yield so they can pay off the pensions in the future, because we have so much pension liability, right? So that's why a lot of other investors, outside of mom and pop, are coming into real estate, because real estate is one of the few places that you can actually get good returns on your money. And that's why so many people are flocking to it. But if you fix the problem with where you can get and make money elsewhere, not everyone's going to flock into real estate, which is why we need an interest rate increase, right? All right. And then the last article here, this one is interesting. Aging in place, how baby boomers are breaking Canada's real estate market. This one is, I'm going to give you the flip side of things, right? I think there's a lot of people my age, and I'm a millennial, that are very angry at baby boomers for wrecking everything. And then you got the old boomer kind of memes going on everywhere, right? And there are boomers that have done very, very well with real estate because they own multiple properties. I think I saw down here that 17% of boomers own more than one property. But the problem is, while there are some boomers who have done very, very well, there are also some boomers who don't do very well, right? And in our culture, like the Chinese culture, we're supposed to take care of our parents, and I do, right? So we actually have to pay for their housing, so they don't actually have anything to support on their own. So there are some boomers who have done well, and there's some boomers who haven't done well. To say that the boomers are kind of ruining the real estate market by not moving out over here of their properties so that millennials who are starting families right now have no place to live is true. It's absolutely true. But the problem becomes, where are they going to move to? Because they are building these condos that are very, very small, and all the people I talk to that are, downsizing, and I call it smart sizing, right? Like they're not getting much more space, and they're not accustomed to that move. So a lot of the time they actually don't want to move. And when you mix that in with the fact that condos are so expensive and you have maintenance fee, it doesn't make sense financially to move. Because let's say you sell your $2 million house and you go to call that $1 million condo, you only pay taxes on the house. That's a little bit higher than the condo, but now you're paying, like, say, $1 million condo, $800 in maintenance fee. That eats into your lifestyle. And if you're retired, like as a boomer, you have a fixed income or a pension, and you don't have more than that, right? So it doesn't actually make financial sense to move, and you also change your lifestyle. Then the other problem is that we have a lot of reverse mortgages because they've made so much money on their assets appreciating. Why don't they just slowly eat away at the equity when it keeps going up, and they can keep borrowing from their house too, right? So a reverse mortgage is where you have a house fully paid off, and then the bank gives you kind of like an income on an interest rate that slowly depletes your equity on your home, and you can live off that until like you run out of equity. But when the home keeps appreciating, is there at some point how much you're taking out that's an equilibrium? The answer is yes, right? So it really prevents and disincentivizes a lot of boomers to move out of their home, because it's just financially not feasible for them, even if they own it, right? And that's why I think laneway homes and garden suites are great, because you could build an accessory home, and maybe the boomers can go and they retire, and then their families could move in, and that creates more supply. But when you just have a boomer move into a condo and then a millennial move into a home, that actually doesn't change the supply at all. The demands don't change. It's just that people are swapping homes for different utilitarian use of that home. So while I agree that baby boomers are aging in place, I don't agree that they're breaking the real estate market, and I think they're getting a bad rap because, well, again, some have done well, some haven't done well, and you really have to look at both sides. But it is great if we can get the supply to increase on these freehold homes, right? So there's all this talk about increasing upzoning every single detached home. Think about what that can do, right? If you can build another like single dwelling in a same piece of land, then yeah, then the boomers can stay and age in the same neighborhood and the population, and then you can actually have someone else move into the other part, right? Whether they're renting or buying, whatever the boomers plan to do, at least there's increased supply at that point. Well, hopefully you found that helpful for this Tuesday React. If you're looking for real estate help on how to navigate this crazy market with interest rates staying the same, probably for like another 6 weeks or so, you can book a call with me using the link right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.